Hey traders, welcome back to another Sunday video where we talk about trading setups for the week ahead. And I also usually talk about my own positions, things that I'm trading, and I try and keep it real with you guys. And speaking of that, this is currently my year-to-date performance, currently up $86,000 on this account, and that is about a 21% gain. Now, to be completely transparent, we had a little bit of a rough patch here in my equity, and again, this is year to date, and we recently saw a pretty good bounce back with everything that's been going on in the indices, as that has been one of my call outs this year. I've been very bullish indices, which has served me very well up until this point. We saw a drawdown, and now I am kind of back to making money with them. So let's take a look here in terms of the current trade that I'm in. I've got the S&P 500 still long, and if you saw my video yesterday, I pointed out how important this signal here was. We saw a breakout at the end of the week, which signaled potentially further risk on sentiment in the markets, right? Risk on in the form of the S&P 500 being a very important indicator by itself in the form of risk appetite. If people are buying stocks, it will carry over into the currency market and into the gold market. And speaking of this, I do actually want to start with what happened with gold this past week. You might notice that in terms of gold's price action, we saw a pretty big sell-off that happened this past week. But the point that I'm trying to get at here is if you take a look at the daily chart with me, for the gold traders out there, the risk appetite in the markets definitely went up. So risk, and what I'm saying risk appetite, what I'm talking about is, investors are fickle. They can be really willing to be, take risk at one point, and then all of a sudden all the risk appetite dries up immediately, like we saw in 2020 and in 2022. A lot of risk appetite went out the window. Well, it seems like risk appetite is on the rise, and all of that impacts every market. So if risk appetite is on the rise, in some ways that takes a little bit of away from gold's attraction, right? What caused this move recently? If you're a gold trader, you got to understand what the heck caused this move. Was it just, a technical breakout? Was that the reason? No. Was that an important thing to spot? Sure. I'm not discrediting the value of using technicals, but what really caused this was the Middle Eastern conflict. Fears erupted around that, and fear is what drove the gold market higher. Well, now risk appetite and diminishing fear, not necessarily just about the Middle East, but just in general about markets, is causing gold perhaps to see a little bit of a decline. Now, if we see any flare-ups in fear, it is possible that we see gold continue to rise, but there's another attractive component to gold that I'm looking at. Let's face it, in terms of the Fed, part of the reason the stock market is rallying, the indices are doing very well, is because there is kind of a consensus that the Fed may truly be all set with their interest rate hike cycle stuff. And if that is over, if that is truly over, that actually could be a delayed effect for a nice bullish catalyst for gold. Maybe not immediately, and again, we have this pullback that is occurring, but I think from both a technical and fundamental perspective, gold is starting to look pretty interesting. Now, you've got support looking left, guys. We've marked this area here and here, and with the fibs lined up, we've got a 38.2% retracement, which comes in to play at the very end of this past week. Now, is this just an immediate signal to get long gold? No, I think at the end of the day, I mentioned this on my streams and such, I think if you get down to a lower time frame and you take a look at, for example, some momentum in the markets, like you're looking for perhaps a shift and a breakout, I've got this simple A1 momentum indicator on the chart, and you can see we've been in a downward trend. And in terms of momentum, I would really like to see some sort of change, some sort of shift in that direction. And then perhaps I'm looking to start maybe getting long. So gold is one that is on my watch list personally. We're signaling potentially oversold. And if we see that momentum shift and we start getting this green to show back up, I kind of like it potentially on the long side. So I'll pay close attention to gold as we go into this next week for perhaps bottoming signals. I'm not necessarily saying, oh, this is absolutely the bottom. I'm saying if we form a breakout retest sort of looking market, this could be a bullish setup for me. So I really like gold, and I will be taking a close look at it as we get closer, as we get into the new week. So I also want to talk about something seasonally. You saw there that I'm still long the S&P 500. Just to reiterate the importance of seasonality. Seasonality is the idea basically of historically there are observable patterns that typically occur, not all the time, and there's no holy grail in anything in markets, but this is a nice indicator that we use constantly, and it's on the Edge Finder. If you're an Edge Finder user, just go over to the Seasonality tab. Very useful data here. What you could see here is that I've selected the S&P 500, and it basically not necessarily, I don't want to say predicted, because I guess it did. It predicted that we would see on average about a 2.5% historical return on the S&P 500 during the month of November. What have we seen? Well, so far we're at 1.21%, and we're just getting started in November. I really like this signal, and I use this to my full advantage. And again, I'll show you even something cool. So I just pulled up the Discord just to show you this. So when I took this signal and shared it with members, I put together a little write-up with which I do everything when I share a trade alert. This is what I do with everything. I put together a full breakdown, a write-up on each and every trade, and then I give updates and so on and so forth. It's meant to be an educational first service. But I shared the trade that I was taking, and I pointed to this fact that seasonally we should expect a bullish market in November. Now, that's not a guarantee that that's going to happen. It's just that is what the data was showing us. That is what my bias was. We had a nice technical breakout forming, and that's what was able to help me catch that wonderful trade, which, like I said, led to that nice jump in my performance this year. Anyways, this data is super powerful, and I wanted to also take a look at some other markets. So if we look at, for example, while we're on the topic of gold, gold doesn't necessarily have anything super attractive. You can see this year, this is an example of why seasonality is not perfect. Nothing is by itself, but it is a very cool indicator and can be very right. Sometimes like gold is up 3.26% this month. Historically, it was pretty much expected to be flat. Same thing with December. We expect kind of a flat, but keep an eye out, guys. Look at what happens, what we generally see in January, which was a really great call out this year, where we expected a bullish run in the month of January. Boom, we got it, right? The white line, as I said, represents what actually happened this year, and the columns show the historical averages for each month. So yeah, very cool indicator. If you don't have access to it, then by the way, the Edge Finder is currently on super sale right now. Check it out. Actually, let me get you this. Check this little graphic we built out. 40% off for the Edge Finder. It is Black Friday, my friends. And if you're somebody who watches my channel on the regular, you know we're a software company out of Atlanta, Georgia. We're a small business, and we build tools for traders that we, of course, use ourselves. You see me using them on my own personal trading capital all the time. No cap, no nonsense, no BS. We really use these tools, and they have been a tremendous help to Frank and I's trading. Frank is my fellow designer on the tool, and we have a team of about 10 people total that is kind of supporting the software projects that we have. But get access to it. It is currently 40% off. It is a massive discount. It's our best discount of the year. YTVIP is the promo code, and there is a link down below in the description. Write that down, use that code, do not miss this. If you're somebody who wants data, if you're somebody who appreciates the power of data in your trading and you want to incorporate what we use, the link will be down below in the description. As I mentioned, that promo code can be found there, and you get access to the seasonality data that I'm looking at, our COT data, which is of course super important, shows you what institutional money is buying and selling. We just built a COT indicator as well. We've got some very cool projects coming for the Edge Finder, and of course it also has our top setups window, which shows you trades that are being potentially spotted by the Edge Finder. So like right now it's saying potentially a bullish setup forming on NASDAQ. We have Aussie yen. We have oil as a potential bearish setup, and UK 100 as a bearish setup. So very useful to get this. This is personally how I find a lot of the trades that I take. I go to the top setups algorithm, which this, by the way, is taking a total score of all of these different metrics: inflation readings, labor market statistics, interest rates, economy. If you're a little bit, if you think fundamentals are a bit daunting, this is but you also appreciate that they matter and that you want to understand them, incorporate them into your trading bias, then this is why the tool has been engineered. The idea behind it is that this tool will assist you with spotting economic data, showcasing it in a way that's easy to understand in all of the different individual tabs, but then at the same time, it will rank and file and score it to give you a general bias so that you don't have to do so much heavy lifting, right? You don't have to read 15 articles a day to keep up with economic data. You can get the summary report from the Edge Finder. It also, of course, like I said, it considers the commitment of traders. It follows the smart money, retail sentiment. It stays away from what the retail crowd is doing. And then it generates bullish and bearish signals based on those things. So like I said, I genuinely use it in every single one of my videos, not just because we're trying to sell it, but because it has been a very wonderful tool to help me find better trades all the time. So with that said, like I said, don't miss the sale. It is currently 40% off. Link down below in the description. Okay, so as I was saying, in terms of this upcoming week, if you heard my video yesterday, I was pointing out how important CPI will be on Tuesday. Tuesday, 8:30 a.m., we have CPI and core CPI. Markets are looking to see inflation continue to trend lower. As long as we get that, I think we stay on the course of that nice build in risk sentiment. So that's what I'll be watching for. If that changes, perhaps there's some reversal trades and some things that we could watch out for. If this stays really hot and is problematic on that day, what I will likely have happen to me is my trade, that S&P long that I have on, will likely end up getting stopped out for a profit. So I've trailed my stop loss, but if inflation were to come out really hot, yeah, that would probably cancel my trade idea and I would just take profits. But if we see a cooling, the market should continue to rally. And with this breakout here, I'm confident to hold it into the week or hold it into the weekend as I have. But we'll see how that inflation number comes out. On the same token, you do have retail sales and Empire State Manufacturing numbers coming out on Wednesday. And that, of course, comes with the producer price index following CPI, right? So PPI and CPI both this upcoming week. Very important inflation statistics. We'll be looking for some further confirmation that inflation is moving in the right direction. And if that does in fact become the case, we will happily hold on to this S&P trade as, let's just daydream here for a second. If inflation continues to cooperate, I really think that the next key target for the S&P 500 is a leg higher up into, for the SPY specifically, which is just an ETF that tracks the S&P 500, a move up into the 450s. And, if you're somebody using the Forex broker variation, the CFD, or the futures version, 4,500 might be what we're talking about, right? So generally speaking, SPY is just like 1/10 of this, but it's not perfect. But generally speaking, it's roughly that. So again, if we're thinking perhaps a move up into 450 or for the 4,500, that's an aggressive move. That's at that point I would continue to trail stops and let this winner run, but it's run really hot, and so that is possible to occur. But you very well may see some breakouts, some pullbacks. I mean, I'm not necessarily in a rush to end this trade, and I want to let it run for as much as it possibly can while staying patient. So that's that. Let's take a look at Euro USD. So for those of you guys who are trading the Euro, I've been pretty vocal about this. I think we may have reversed. I think we are starting to see a potential reversal. And going back to that term that I keep saying, that risk sentiment turning more positively will likely help the Euro US dollar. Why? Well, again, if risk sentiment kind of improves, places like, some of the places that have been really pushed down in terms of their currency compared to the dollar may see some relief, right? The dollar's been so strong because people have been going into it as that safe haven. If that unfolds, if that changes, we very well may see this euro continue to squeeze higher. In terms of targets for the euro, you take a look at the daily chart here. We could see, again, if this risk sentiment stays cooperating, a not necessarily straight shot like this, but you see what I mean? Like perhaps we make our way gradually to that 1.0922 level. Now, why that level? Well, let me show you. Here's the thing, right? This thing has been on a massive downward trend, and getting us up to there would give us a nice pullback to roughly, generally speaking, like a 50% retracement to 61.8% retracement of this longer term move. Even if you're a bear, it's hard to deny the fact that we've had a really long squeeze to the downside. Perhaps it is due for just a longer term pullback. And even if you're a longer term bear and you think that, well, yeah, it might go up there in the short term or, the midterm, and then longer term, it may continue its downward trend. But for me, I think that this is a trade opportunity. I think that there are some squeezes higher coming for the euro dollar. Again, price action seems to be shifting, and I think that that is pretty interesting. Now, one market that's a bit confusing for some Forex traders is dollar yen. Remember that in terms of these two currencies, why the heck is the dollar staying strong on this currency pair so much so? Well, it's the Japanese yen. Japanese yen is also a risk-off currency. The dollar is risk-off, I would say, more than it is risk-on, but it's not nearly as purely risk-off as perhaps the Japanese yen. So despite that, though, the Japanese yen has really fallen apart in the past few years based on some of the Bank of Japan issues and stuff that have been going on. They are seeing pretty much their currency get destroyed. Well, not necessarily destroyed. There are other places that have had it much worse. But the point is, the yen continues to be in a strong free fall. And I think if you're looking at the dollar yen, we're back above that 150 mark. To me, this thing looks like it still wants to trend higher. I mean, it's hard to deny this trend exists. And as I said with the euro, sure, if you start to see formations of a reversal, yeah, it has plenty of room to come down in this case. But we're not seeing that reversal, right? We're seeing strength at support levels, and that's been a very consistent theme. So, I think that if you get breakouts, retests, for me, the story continues to be bullish. I think if you're a dollar bull, the area to be, in my opinion, would be more aligned with like dollar yen than trying to go short euro dollar. That's just my personal opinion, because in the case that perhaps risk sentiment stays strong, the dollar yen could theoretically still be strong, right? Because that yen is that risk-off currency. So keep an eye on that. It's worth noting. Aussie yen is one that might be interesting to you if you're an Edgefinder user. Aussie yen, you could see here, pulling back what I would say to a very healthy level of support. Take a look at this, guys. This was a huge longer-term level of consolidation. I mean, look at this. This is a daily chart, guys. That goes back to July of just being the headwind to this market. And we finally saw the breakout. I mean, that's a decisive, clean breakout. And last week, how do we close? Well, we had like a nice little doji hammer looking candle here. And now as we pull back into this zone, I would say that this area looks mostly attractive for perhaps more upside. Again, the Edgefinder's giving it a nice bullish score. We got a +5. And again, I think I like that idea. So I might actually trade that one this coming week. Not a currency that I usually trade, not a currency pair that I trade frequently by any means. But if I take that trade, you guys will see it inside of the Discord. I did mention that earlier. Remember, you can get all of these notifications. And I did mention the Black Friday sale for the Edgefinder. But we also do have, of course, the VIP group, which is available for that Black Friday sale as well. Come trade with us. This is a huge week to do it. We have CPI on Tuesday, and that Wednesday following PPI and retail sales. I know already that Frank, Ivan, and I, we run the group in terms of the trading side of things. We will be incredibly busy. So if you'd like to come trade with us, this is probably the best week to join of the entire year for the purpose of a couple things. First of all, you have CPI and PPI, which are very, very active times in the market for us. When news comes, Frank and I typically trade more. So I know some people say like, oh, I don't like to trade news. Well, we trade more during the news events because we're fundamentalists. We look at the catalyst that is news as an opportunity, not as something to fear, right? Now, I'm not saying we go gamble the news events. I'm saying a news event will come out and boom, Frank and I are looking for trades because it's like now we have something of substance to trade. It's the beauty of being a fundamentalist. Truly, everybody who is on the purely technical side just fears and stays away, news. Whereas if you're a swing trader or a fundamentalist or even a short-term, swing trader, potentially day trader, These things create catalysts. You don't have to fear them. You just have to understand them. So that's what we do in the group. That's our attempt. So CPI is coming. And of course, like I said, the Black Friday sale is 40% off. So you get access to everything that we've got going on. Everything are values that we've been working on in terms of the community, the Edge Finder, anything you'd like. It is the work of our careers, really. It is all 40% off for you right now. So it is the best week, I would say, of the entire year to get your access set up to the Discord or to the Edge Finder. With that said, guys, that's going to wrap up my week ahead look ahead. If you did enjoy that video, hit the thumbs up button. And remember, like I said, I'd love to have you inside of our Discord channel. If you do join this week, shoot me a DM. Just say, hey, I watched from the video on Sunday. And I would definitely reply to you. If you send me a DM on Discord, if you're a member, I try and make every member who sends me a message, I try to get them a response. So would love to chat with you. Thanks very much, guys, for tuning in. Have a wonderful week ahead.